Hey everyone, thanks so much for joining me. This is Mr. Market. We're now into episode 31. Thank goodness for the end of September. What a horrible month, just all around. The market was down 4.74% for the worst performance for the whole year. And thankfully for us, we did quite a bit better. We also lost money, but we were able to avoid about 87% of the damage. We were down only about 0.62%. Year to date, we're up 17.03%, while the S&P 500 is up 13.03%. So as you can see, it's been a bit of a neck and neck race where we take the lead and then the market takes the lead and then we take the lead. So it's going to be a really interesting fourth quarter to see how we finish up. Looking back over a longer period, we are doing very well relative to the market. We're up 35.87%, while the market is up 15.59%. And this is since we started trading on the pendulum algorithm signals on July 1st of 2022. So we now have a track record of about 15 months. And as you can see, we are able to return roughly more than 2 times the market with significantly less risk, typically about 75% less risk than the market. So if you've ever been wondering why you should listen to me or pay attention to any of my talks and episodes, this is a pretty good reason. We have what seems to be a pretty robust investment strategy. I am planning on making this into an institutional product at some point, and you just get to see the live performance as I continue to test it out. So today we're going to have a big picture look at the market and analyze its trend, and we'll also look at the risks and opportunities that are available in the coming weeks. And then we'll look at some charts about the market and the economy, and finally, how I'm positioning myself for the coming week with my positions. Looking at the big picture, we can see that the stock market dropped all the way to its trend line that began in October. It was really important that it held because you have a lot of trend followers. They pay attention to this stuff, and if it fell below it, it possibly could have triggered some more losses. Now, from our previous episode, we did see and make a point that the market was reasonably oversold, that we could get a bounce. And so we did get a little bit. And zooming in, we could see that it did temporarily break through that upward trend. And if you were watching the minute by minute action, the sell-off did accelerate for a little bit before it reversed. So it was really important that it held. But the big problem that we have this weekend and for this coming week is the government shutdown that people are predicting. And if that happens, as we've seen in the past, when we have a government shutdown, typically the markets decline a couple percentage points. And if that happens again, that could potentially take us lower below this trend line. So that's something to go watch out for. Now, onto the potential risks that we have. I just mentioned that we have this potential government shutdown, and it has been warned that if we do get a government shutdown, the U.S. credit agencies could give the U.S. another rating downgrade. And if that happens, markets typically don't like it. Bond yields go up, and as we've seen, bond yields have had a very strong gravitational pull on the market. As rates go up, the fair value for the market goes down, and that could result in further market weakness below this upward trend line that we've been paying attention to. And if we have a breakdown of that upward trend, that could translate into more selling. Yes, even though we do have an oversold condition, that doesn't mean markets can't fall further. In fact, some of the interesting observations that I've had over the past few decades is that some of the biggest losses happen at the lows. So we need to be careful of that. Just because something's oversold doesn't mean it's an entry point. As a rule, we don't know how far downtrends can go. We just need to pay attention to it, put a moving average, and finally when it crosses up above it, that is when it is relatively safer to be making an entry. And also the final risk is that the recession risks, they are increasingly rising. With the Federal Reserve raising their interest rates and keeping it higher for longer, that is going to choke off more of the consumer spending, and that could increase the risk of a recession. Right now, a lot of people don't think a recession can happen, or if it does, it's going to be shallow. And if that narrative changes back to one where the soft landing is no longer the base case scenario, like the Federal Reserve said, then that could add further weakness to the market. On the flip side, let's look at some of the opportunities ahead of us. Let's say we do get this government shutdown. Well, once that happens, the market will start looking forward to the end of the shutdown. And since markets are already in an oversold condition, with the caveat, of course, that it can get more oversold. When you do get the recovery, it tends to be pretty strong, especially if the magnitude of the decline has been pretty sharp, like we saw in September. So if you have a really bad month, typically we get strong rebounds on the following month. And that also coincides with the seasonally strong fourth quarter. If you just take a look at the historical data, fourth quarter tends to be very good for the stock market. And we're setting up for a potential repeat of history. Even though we have some good setups for the fourth quarter potentially, we still need to keep in mind that bonds have been playing a very important role in returns for this year, and the elevated inflation expectations are going to keep pulling bond yields higher. And if bond yields are going higher, that could continue to add pressure for the stock market. So, we need to keep these positives and negatives in mind as we position ourselves. And speaking of positions, I set my strike prices for this upcoming week at $416 and $415 for the puts that I sold. And as you can see, I'm putting it right at that support level where the market previously broke out. My expectation is that if the market falls to this level, you get a lot of buyers, and that's going to provide a lot of safety for me. So that's all I've got for this week. Thank you so much for joining me. And if you haven't yet, please click like and subscribe so then you'll know when my next videos drop. I wish you the best of luck in your trading this week, and I will see you next time.